Welcome, I'm Carter Johnson, creator of Financial Empowerment, Invest in Yourself. In the next hour, we're going to shed light on the world of investing. Investors should always take into account the relationship between risk and reward. For example, an investor's stake in a stock of a promising new company with a new pharmaceutical cure-all drug can reap large rewards or drop in value dramatically if it's found that this new wonder drug has life-threatening side effects. In contrast, if you invest in a U.S. Treasury bond, your relative risk is minimal, but the returns of your investment will be modest in most cases. If you're an aggressive investor, the more risk you take, the higher your relative upside will be. But your downside risk can be just as high. For the conservative investor, the less risk you take, expect modest returns, but your downside, relatively speaking, will be limited. Now, risk tends to lessen over time. Corrections and bear market dips and valleys eventually trend to the upside over time, and being too conservative can jeopardize your long-term goals. This chart shows the growth of the Dow Jones Industrial Average from 1985 to 2007. On October 19, 1987, or better known as Black Monday, the Dow experienced one of the worst one-day drops in its history. The Dow Jones Industrial Average lost 508 points, or 22.6%. But after further inspection, you realize how bad a drop that was, but more importantly, how quickly the market recouped its losses. And on January 2nd, 1987, the opening day of the market opened at 1897. On August 25th, the market hit its peak at 2,722. October 19th, Black Monday, dropped the market by 508 points to 1739. However, December 31st, 1987, the last day of the year, the market closed at 1939. The market, interestingly enough, was positive for the year, even given the horrible losses of Black Monday, with a start at 1897 and closing at year's end at 1939. The Federal Reserve raised rates 6 times from 1999 to early 2000 because the economy was losing steam. March 10th, 2000 signaled the end of the dot-com era and the decline of the NASDAQ. September 11, 2001, terrorists strike the World Trade Center. After all of this, the overall market was able to rebound and recoup its losses and eventually trend up.